In today's video, we're going to talk about oil. I know what you're saying. Oil, I don't care about oil. It's broken. It's down. The oil stocks are down. It's out. I don't care about oil. Well, I get it. But here's the thing. You want to buy low and sell high, don't you? Well, if you want to buy low, you got to look at the markets that are out of favor and see if the market is making a mistake, which it is in the oil sector. In today's video, we're going to talk about the supply side, we're going to talk about the demand side, and we're going to talk about the risk. Boy, the risk that the oil bears are getting themselves into. They could get an oil fireball to the face pretty much any day. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. Hi, my name is Daniel Wilhelmi. Welcome to the channel. Happy 4th of July weekend. Happy Independence Day. If you're in the US, if you're traveling today, I don't know, we talked about it, to Vienna or to Miami. I wish you safe travels and a wonderful weekend wherever you're going. Maybe we'll see us in Miami on the beach. Who knows? Well, what's not as pleasant as Miami and the beach is the oil price. Look at this chart, weekly candles, WTI. I mean, it's been a House of the Dragon style slaughter in the oil market. What is going on? Well, it's a pretty easy calculation. So on the macro level, the Iran war has been a disaster, has made the situation in the Middle East much worse. But the market only cares about the thought that, ooh, there's peace. We want peace and we want the Strait of Hormuz to be reopened, which, by the way, okay, it can be officially be reopened, but that doesn't mean that the oil transferred through there is going to go to the levels pre-war anytime soon. And then the second major thing that happened is that the Chinese flooded the market with oil. What nobody knew was that the Chinese built up gigantic oil reserves coming from Russian oil imports through the shadow fleets, a little bit through the pipelines, but it's mostly the shadow fleets, how they get the oil. And that pushed down the market, and now the bears are in control, and they're pushing down gold hard. Oil hard. I mean, look at it. We have broken through the 200 weekly. We just regained after the Iran war broke out in March. Already back below it, below the 50. And looks like we're confirming it. I mean, it is a mess. So why do I care about oil so much? Well, because the fundamental situation is very different than the price development. So let me ask you, let's start with this. And sometimes the market can be really easy. And then it's just a question of when you position yourselves and risk management and waiting till the market figures it out. So this is the start of 2026 here. And we saw in December a bottoming phase. And this is clearly people in the know. These are weekly candles. So the last 2 weeks of December and the first week of January, people in the know positioning themselves pre-Venezuela. So then Venezuela happens. So this triggers this spike right here in oil. Okay, then we're consolidating it. And then we see mid of February, it's starting to pick up again. So again, it's the people in the know that know, okay, Iran war is coming. So if we take just the lower end here, we're around 63. We're at $63 in the middle of February. And today's oil price is around 69 to 70. So ask yourself, is the global oil market and the Middle East in such good shape, or let's say it in less bad shape that the oil price is only 10% higher than it was before the Iran war. When the Strait of Hormuz was completely open and all the oil was flowing not only from Iran, but also obviously from all the other Middle Eastern countries, and the oil fields were working normally, not like right now, where a lot of production is shut down and it's going to take quite a while to get it back online. That's the current situation, which is highly unstable, and nobody knows what the Iranians will do with the Strait of Hormuz. Is this situation, does it only justify a 10% price increase in oil? I don't think so. Not at all. Wherever we look, and the oil bears will say, well, yeah, demand destruction, economies are not doing so well. Not wrong. But what they are not looking at are the massive strategic reserves that need to be refilled. Wherever you look, except China, the reserves of countries that are not major oil producing countries are at low to critically low levels. The countries of the OECD, their reserves are down to a 50-day reserve. That is the lowest level since the early 2000s. It's Independence Day, so let's talk about the US. US strategic reserves at the lowest level since 1983. Now, let me make something very clear. And this is also important because this is something that the bulls like to not talk about. The strategic reserve, oil reserve in the US was built out in a time when the US was a major oil importer. Now, thanks to the shale revolution, it's not an import anymore. It's one of the biggest exporters in the world. So the strategic reserves in the US don't need to be this high anymore. So it doesn't really make any sense to look at the levels of like the 80s and the 90s and say, well, that's what they're going to refill. The US doesn't need to do that. But they do need to refill it a little bit because guess what? Energy and oil is a geopolitical weapon. There is a reason why the US is doing what it's doing. I know the Trump haters think there's no plan and he just wants to hide from the Epstein files and all this tinfoil hat bullshit. Oh, there goes the flag from YouTube. I'm sorry. The US is positioning itself for the next century to be the dominant player in the most valuable currency in the world, and that's energy. Look at the uranium sector for a second. The US will not be able anytime soon, and with any time I mean like a decade at least, probably actually never, but become a dominant uranium producer or refined uranium exporter in the way that Canada is up there, that Russia is up there, that Pakistan's up there. But what they can do is they can become the number one in SMR technology, the next nuclear energy technology, and control, so to speak, the hardware market that way. And that's exactly what they're doing. That's why you see this super aggressive push that you don't see anywhere in Europe, really, for SMR technology. And when it comes to oil and gas, that's exactly what they're doing as well. So from that scenario, the Iran war actually made sense when you want to become the dominant number one power for oil and gas in the West and hold the most valuable currency of the coming century. Now, was executed terrible, but we understand the forces behind it, okay? So, geopolitically, I think two things are happening here. The Chinese are flooding the market. I think the Trump government is clearly pushing down the oil price to lower inflation, to set the stage for rate cuts going into the midterm elections, which, shock horror, would be great for gold and silver. See, now, even if you don't like oil, now it pays off that you watched the video. But what about the demand side? Because you hear everywhere, well, demand is low and the economies are doing terrible. The economies are not doing great, but usually when the oil price goes below 70, that's when activity picks up. Plus, again, we just talked about the demand side in terms of strategic reserves. The countries are at record level lows. They will need to refill their strategic reserves. That's the first thing they will do. Not only that, after the Strait of Hormuz and the price shock, don't be surprised to hear that a lot of them are actually increasing their strategic reserves dramatically. That's the completely logical action to take, besides the comeback boom of solar. We talked about it here on this channel a month ago. If you missed the solar rally and you missed these videos, hit the subscribe button so you're on it. It will take a lot longer to fully reopen the Strait of Hormuz. Mines need to be removed. We need to see if the Italians are really Italians. When if the Italians ever done anything on the global scale. The Iranians, if the Iranians are ever, I want to throw in this Italy World Cup joke so bad, but I'm not gonna do it. I'm not just asking my Italian brothers and sisters that are watching. How does it feel to not participate in the World Cup for, what is it now, 8 years, 12 years? Well, but then, the Germans just already, we're home and sitting on our fat German asses, lederhosen asses as well. So maybe I shouldn't talk about that. So back to Iran. It'll take a long time to reopen the Strait of Hormuz. We do not really have any room in the oil market right now for any interruptions in oil supply or delays. Anything in that regard would trigger a severe price shock. Yes, the countries in the Middle East will start to build out their pipelines, but this will take time. The situation in the Middle East is now significantly worse and more unstable than it was before the beginning of March and before the Iran war. Iran is the big winner here. They now understand how they can exercise their power over other countries in the Middle East, and that has effects on the oil markets. So why is the oil price crashing? And we have to call it a crash, no doubt. Again, as I said before, China flooded the market. Trump government is pushing down the oil price to set the stage for rate cuts and trend following investing. You see it pretty nicely here. You see that triangle formation. We broke to the downside, and there's the signal, and the bears have been just hammering the oil price. But the fundamental factors are not nearly as bad as it suggests. It's rather the opposite. The supply side is extremely tight, and any shock that happens will send the price higher. So therefore, this weakness is an interesting buying opportunity for oil stocks. If you follow our new show, Hot Dividend Winners, if not, you know what to do. Subscribe button. Ding, 1 second. There you have it. Coming out tomorrow. Then you know that is my favorite strategy to play the oil sector, because you can get some great dividends, especially with oil companies from the emerging markets. We talked about a couple in past videos that performed outstanding. And this weakness, for me, is a great buying opportunity. Now, I don't know if it's for you. I'm not your financial advisor, but that is my opinion about the oil market. Yes, we need to let it bleed out completely. But what is the downside risk now? If you look at this chart, you say, okay, it's a gap fill. Will oil break down to 50 again? Again, ask yourself, just geopolitically, We were at around 57 in December. Is the world today in the same geopolitical place that it was in December? No. Middle East is a mess now. The Ukrainians are bombing, the living shizzle dizzle out of the Russian oil factories and the harbors. The Russian oil production and exports are down significantly. Now that's under sanction, but obviously India and China have been buying. So even the Russian oil situation has deteriorated significantly. It does not make sense that the oil price would go down to 57 fundamentally. Short term, anything is possible, but again, long term, this is not happening. We will establish ourselves at a higher price. I'm not talking about $150, $200. That was ridiculous to begin with. And I never talked about it on this channel that way. Right? But $75, $80, yes, that's absolutely in the cards. So if we use the sell-off to position ourselves well, if that's what we want to do, and that is indeed what I will do personally, but I'm not telling you that's what you should do, because I can pick up juicy dividends here with one of the sectors that will be most influential in the coming decades, which is oil and energy. That's it for today. Have a great Independence Day weekend. I think I want to watch the movie with Will Smith. I love that movie. Welcome to Earth, Klong. Awesome. We talk tomorrow. Bye-bye.